Now, the chart of accounts is probably the most important organizing tool, especially as it relates to accounting and reporting processes. The chart of accounts is basically a list of codes representing different categories or groups of transactions that any nonprofit agency may get involved in, whether it's on a monthly basis, a daily basis, a quarterly basis, an annual basis. Nonprofit organizations buy a large variety of different types of goods and services in order to help achieve their objectives. At the same time, they receive different types of income. They can receive grants, donations, membership fees. In order to make sense of all the financial activity, we need to sort the different types of income and expense into a series of predetermined categories. And then when a transaction takes place, it'll be recorded in the books of account, it'll be recorded in the books and categorized according to the guidance held in the chart of accounts, based on those codes. Cost centers restricted funds have to be accounted for separately in order to demonstrate to the donor how the funds have been used. Typically, it's known as fund accounting, and it'll require that such funds have separate codes. And now every cost item concerning the fund's activities is listed under that specific code. That's step number 3, developing a financial account structure based on chart of accounts and based on cost centers. That's step number 3. Once we have step number 3, we can go on to step number 4, developing a finance manual. A finance manual is basically a document containing the financial policies of any nonprofit organization. Financial policies are rules governing the handling of a nonprofit organization's finances. It'll include a statement of delegated authority, which describes everybody's role from a financial perspective. Now, what financial policies do we need? So again, there's no clear-cut financial policy for every organization. Every organization needs its own unique policy. But the policy will typically contain the finance manual typically contain policies that relate to a number of areas. It may relate to a policy regarding donor or income it may contain areas such as donor or income policies. It may contain budget policies. It will contain budget policies. It will contain expenditure policies. It will contain travel policies. It will contain asset policies, petty cash policies, salary policies, staff loans, and opening and operating a bank account. These are the 9 areas. These are the 9 areas of policy that a finance manual typically contains. Again, it'll contain donor and income policies. For example, policies regarding receipts, policies regarding deposits. It will contain budgeting policies. It will contain expenditure policies. the amount of expenditures, payments, requisitions, non-budget expenditures. It'll contain travel policies, for example, car hire, class of airfare or hotel, per diems, and ordering policies. It'll contain asset policies regarding the assets, for example, purchasing, utilization, maintenance and disposal, vehicle policies. It'll also contain policies regarding petty cash. It'll contain policies regarding salary. It'll contain policies regarding staff loans. And it'll contain policies regarding opening and operating a bank account. These are the 9 areas of policy that a finance manual will address. These are the 9 areas that we need to take a look at. The 9 areas we need to set up policies and procedures for these 9 areas in order to accomplish step number 4 of developing a finance manual. Now, when we're developing the policy, we need to make sure we have enough information to develop that policy. We need to clarify why the policy is needed. We can write a short paragraph or sentence to explain the need. Why would we need a per diem policy? Is it because the staff are doing regular work out of town? Do they need to know in advance what money will be available to them? We need to define any terms that may need defining. What would per diem mean in the finance? What would per diem mean as it relates to our employees, as it relates to our financial policies? We need to clarify the purpose of the policy. What do we want the situation to be as a result of having this policy? For example, the policy is intended to ensure consistency. We need to clarify organizational principles that will underpin the policy. Is it because we want transparency? Is it because we want consistency? We need to note these in writing. We need to clarify who the policy will apply to. Again, we need to note this in writing. Does it apply to all staff? Does it apply to all staff that are traveling out of town? Does it apply to all staff that are traveling out of town overnight? Or they're traveling out of town overnight in project business? We need to clarify exactly who the policies apply to. What is the existing situation? We need to clarify what the existing situation is. We need to write a short paragraph or sentence that does this. For example, this was always decided on an ad hoc basis before. Then we need to put it all together and circulate the draft policy for feedback. This is how we go about developing a finance manual. We take into account the 9 areas that we want to develop policies for, and then we'd go ahead and make sure that we have all the information we need to develop the policy. We'd clarify why the policy is needed. We'd define all the terms that need defining. We'd clarify the purpose of the policy. We'd clarify the organizational principles that underpin the policy. We'd clarify who the policy will apply to. We'd clarify the existing situation. Then we'd put it all together and circulate the draft for feedback. Once we accomplish the development of a finance manual, we can move on to step number 5. We can now keep financial records. The financial records will be most beneficial when they're accurate. In order to keep accurate books, we need to have the following. We need, first of all, a bank account with a checkbook. We need a daily record system with receipts and petty cash vouchers. We also need a monthly record system with a petty cash book and a cash book in order to record and analyze the income and expenditures. In addition, every financial transaction needs to go through the following steps. Number one, step one is the transaction takes place. Either expense or income. It took place. Number two, the transaction is recorded in writing as proof that it's taken place. It could be in the form of a receipt that we've issued for money we received, or it can be a receipt that someone's issued to us by, say, the supplier when we paid for something. If the payment is electronic, we'll receive the confirmation of printout. If we pay by check, or if we're paid by check, although we might not receive a receipt or issue one, the transaction is nevertheless recorded in the bank statements. Once the transaction is recorded in writing, whether it's in the form of a receipt, whether it's in the form of a bank statement, the transaction then goes and it's recorded in an accounting book. All the money received, all the money spent, the record will be in the cash book. It can be either manually or on a computer. Next, we'll make a summary of all the transactions and written into a monthly statement. And finally, all the transactions we put down in a summary for the year, written down in an annual statement. These are the four things we need in order to keep accurate books. We need a bank account with a checkbook. We need a daily record system with receipts and petty cash vouchers. We need a monthly record system with a petty cash book and a cash book for recording and analyzing the income and expenses. And we need to make sure that all financial transactions go through those 5 steps. The transaction will take place. The transaction is recorded in writing. The transaction is then recorded in an accounting book. Then we make a monthly summary. Then we make an annual summary. That's how we go about accomplishing step number 5 of keeping financial records. Once we have all that done, we can go on to step number 6. That basically is how we go about setting up a bookkeeping system. That's basically how we'd go about setting up a financial management system. And that's basically how we'd go about accomplishing a successful financial management policy for our agencies. Once we've successfully implemented a financial management system, we can more efficiently and more effectively meet the documentation and reporting requirements. Now again, there's no unique system. There's no overall, there's no generic system that'll work for every agency. Every agency needs a unique system tailored for their specific needs. But once we've identified our specific needs, and once we've successfully implemented a financial management system, we'll be much better equipped to effectively and efficiently meet the documentation and reporting requirements. Now let's just sum everything up. Okay, we covered why we would bother with a financial management system. We covered how to set up a bookkeeping system. And we covered what financial management actually is. Thanks so much, guys. We're going to go ahead now and open up the lines for question and answer. Feel free to ask anything. We'll be on, and it's been a pleasure to have you.